as a reminder, if you're a member of the MIA, you have access to the electronic version of the IVS 2000, and that will be effective in 2025. So going to the next slide. I just want to remind everyone what our mission at the IVSC is. We do two things essentially. First of all, we establish globally consistent, transparent, and high quality international valuation standards that apply across all assets. And the second thing we do is that we support the growth of the valuation profession, and in fact, beyond that, a full ecosystem of professionals, of stakeholders that are involved in valuation, and that, of course, includes the accountants in the countries we are present. If you go to the next, slide, here's a reminder of the kind of organizations that are members. Just a reminder, the IVSC does not accredit individual valuers. Rather, we have members who then accredit individual valuers and professionals who engage in valuations. You can see the various types of members here, including, of course, what we call valuation professional organizations, which accredit valuers. Going to the next slide, you can see that we have 200 members, and we have, of course, the MIA in Malaysia. If you go to the next slide, the real strength of our organization is not the staff, although you've got a dedicated staff of 7, both in London and, of course, in Singapore. But we have a great resource, and those are the volunteers. And the volunteers are they're professionals from a number of organizations, large and small, from all the jurisdictions. And these professionals dedicate their time to contribute, in addition to their day job, to writing the standards and promoting professionalism in valuation. And so we have about 130 of these volunteers. Next slide, please. This is the structure of the organization, just to give you an idea, and I would like to focus on the right side, the right panel of this slide. You can see the Standards Review Board, which is the apex board that is responsible for the general standards, and of course that is responsible for making sure that all the standards, including the tangible standards, the business valuation standards, and the financial instrument standards, are consistent with the principles and the provisions of the general standards. We'll talk more about those. Another important feature which I do want to mention to you is that increasingly you have different stakeholders that are looking at valuations, and one of these stakeholders, one class of stakeholders, are the regulators of financial markets, which of course are very important for you as accountants, and I'm talking about the majority of accountants here. IOSCO is the organization that is the umbrella organization for all the securities regulators of the major economies, and of course we now work under an agreement with them, because they have stated very clearly that valuations are important for the integrity of the financial system.
So before I talk about the structure and implementation of IVS, we've got 2 aims for this. One, to bring you awareness of the changes that have happened to the International Valuation Standards, which are effective from the 31st of January 2025, though early adoption is encouraged. My other aim is to turn the 55% of you into users of IVS and realize that actually, even though you may not be fully in compliant with them, they do show the best valuation practices, and hopefully they'll be helpful for you for your work. So IVS are a set of high-level principle-based standards for the practice of valuation, and they cover all assets and liabilities. And we provide an internationally agreed best practice framework, and we're widely recognized as the global standard for valuation today. We have no enforcement mechanism. Our local members and regulators and organizations who are members of the IVS regulate their own members and also adopt our standards as best practices. So I wanted to talk a little bit about compliance, because IVS, being overarching, and principle-based. It interacts with other standards, so it can work in conjunction with IFRS. In fact, we have regular conversations with technical directors from other organizations. We try and make sure that we collaborate and our standards harmonize. So you can comply with IVS at the same time as you're complying with International Financial Reporting Standards. And this compliance is a function of, first of all, the general standards. So you need to comply with the IVS general standards. And then we have asset standards that relate to specific disciplines. For example, there's 4 chapters on business valuation, IVS 200, business and business interests, IVS 210, intangible assets, IVS 220, non-financial liabilities, and IVS 230, inventories. And in addition to complying with the general and asset standards, valuers need to comply with legal, statutory, regulatory, or other authoritative requirements appropriate for the purpose and jurisdiction of the valuation. And if in conflict with IVS, those requirements should be prioritized, explained, documented, and reported. So you can see here the structure of IVS. So our general standards relate from everything from your initial instruction all the way through to your final documentation and reporting. IVS 100 has valuation framework, and within this we have the valuation process, quality control. We see quality control being an extremely important part of valuation. There needs to be a degree of review and challenge in every valuation. IVS 101 scope of work deals with everything from the deals with your initial instruction, which you may also know as terms of engagement. It provides a scope of work for not only valuations, but also for valuation reviews. IVS 102 deals with the basis of value. And in terms of the basis of value, we have IVS defined basis of value, and these are basis of value where the definition is actually held by IVS. And we have IVS non-defined basis of value, an example of which would be IFRS 13 fair value. So the IVS basis of value are market value, market rent, equitable value, investment value, synergistic value, and liquidation value. IVS 103 deals with valuation approaches. There's 3 main valuation approaches: the market, cost, and income approach. But underneath that, there are a number of methodologies. For example, the DCF, discounted cash flow, is a methodology under the income approach. IVS 104 looks at data and inputs and the importance of having good data and inputs. In fact, relevant and observable is the overarching characteristics for data and inputs. IVS 105 deals with valuation models, and appropriate is the overarching characteristic for valuation models. And IVS 106 deals with documentation and reporting. And documentation, in a way, is the macro. The valuer will always have more documentation on file than he has in his valuation report. And we've now included specific requirements in relation to the documentation that you must keep on file, and largely how you must record any professional judgments made in relation to the valuation and the data and inputs used. And on the next line, you can see the asset standards. Now, looking at the poll, just can we go back a slide? Sorry, I meant to say on the next row down below, my error, you can see the asset standards. And I'm going to focus first of all on the ones in blue and in purple, because it doesn't appear that a lot of you work in tangible assets valuation. So as mentioned, the ones in blue are the business valuation chapters. So there's IVS 200, business and business interest, IVS 210, intangible assets, IVS 220, non-financial liabilities, and IVS 230, inventory. And in order to comply with IVS, you need to comply with all the general standards shown above, and then you need to comply with the asset standards, which provide additional information in relation to the general standards and additional requirements. The ones shown in green are the tangible asset standards, so plant, equipment and infrastructure, IVS 300, IVS 400, real property interest, IVS 410, development property, and then as Leonard earlier said, IVS 500, it's very much, we've revised this chapter, and it's more or less a new chapter within IVS, and it brings in and aligns financial instruments with tangible assets and business valuation. So the general standards apply to all asset standards, and as a general principle, we only make an asset standard if there's something new or different. So if you're dealing with an asset class that is not shown here, then you could follow the general standards to have compliance with IVS. So when we were looking at revising the standards, we had a number of enhancement project goals. We wanted to address changes in global markets and global valuation. Valuation is not static. We have new disciplines and new methodologies coming in all the time. At the moment, we're seeing the emergence of artificial intelligence within some aspects of valuation. And therefore, we need to make sure that our standards are relevant and meet a market need. We also describe the roles and responsibilities of specialists and service providers. And remember, it's called International Valuation Standards, not International Valuer Standards. And valuation is a process, and we may use external specialists and service providers within that process, such as data providers, rating agencies, etc. We also wanted to make sure that we align the international valuation standards with the valuation processes that valuers perform. So when we looked at our general standards, not only did we make sure that they equally applied to all our disciplines, but we also restructured them because it didn't make sense that reporting was a middle chapter within the general standards when it's the last thing that the valuer does within the process. We also wanted to create standards which allow for new types of assets or liabilities, such as environmental, social and governance, which we're looking forward to joining the panel discussion on later. And we wanted to make sure that our requirements were uniform across all assets and liabilities. So the general standards were general standards, and they actually apply to all assets and liabilities. So just talking through a summary of some of the key changes, and we're not going into a great deal of detail, though we picked a few bits that will go into further details, but we now have included a valuation framework within the standard. We've tried to clarify key concepts. So for example, we have must. We work a two-tiered hierarchy. So must means that you have to comply with it. Should is comply or explain. There may be reasons why you don't have to comply with it. We've included a number of new definitions, such as the definition for valuation risk, professional judgment, professional skepticism. Data and inputs is a new chapter within IVS. It's IVS 104, and within data and inputs, we also have definitions for this term. Data is the macro, so it's all that information that you consider, and inputs is the micro, it's the information you actually use in your valuation. And within the chapter, we state that the aim of the valuation is to maximize the use of relevant and observable data to the degree that is possible. And we have a number of characteristics that you'll see in the standard: accurate, complete, timely, and transparent. And it's the valuer's job to maximize those characteristics within a valuation. There's also sections on input selection, and data and input documentation, and ESG, which we'll talk about later, is an appendix to this chapter. Valuation models, IVS 105, addresses the selection and use of valuation models to be used in the valuation process. And we state very clearly within the standard, no model without the valuer applying professional judgment, for example, an automated valuation model, can produce an IVS compliant valuation. Now, this doesn't mean that it couldn't be used as a tool within your valuation, but if you are using an AVM, an automated valuation model, then this would not produce an IVS compliant valuation. And when we look at valuation models, the overarching characteristic is that they must be appropriate. And once again, we've got characteristics, accuracy, completeness, timeliness, and transparency. And it's the valuer's role to maximize as many of those characteristics as possible. Valuation process quality controls is an extremely important part of any standard. There needs to be a degree of review and challenge, both in relation to the inputs that are used, but also the results of the valuation. We've also highlighted standards on documentation, and it's important to remember that if things do go to litigation, it is that documentation that protects you if in the case of a dispute. And those disputes often happen several years after the valuation is undertaken. So it's extremely important that valuers keep their correct documentation on file. And the other key change we've added is considerations in relation to environmental, social, and governance. So just talking about the valuation framework quickly, and you can see in the diagram above the way that it works. So you have to follow all of the general standards, the relevant asset standards, in order to produce an IVS compliant valuation. And the general standards provides requirements that are applicable across all classes of assets and liabilities, whereas our asset standards provide the additional requirements for specific assets and liabilities. And we've now included appendices that gives more flexibility to the standards, but it also gives us a way to provide additional information and requirements for certain concepts articulated in various chapters within the International Valuation Standards. So I'm just highlighting here some of the bits in relation to documentation and reporting. So valuation reports must contain the following at a minimum: the agreed scope of work, the assets and or liabilities being valued. Sometimes asset identification becomes an issue, particularly in business valuation, where there is a process of investigation as part of the valuation. The identity of the valuer, the client, the intended use and the intended users, the valuation currency or currencies used. In many cases, you may be using more than one currency. The valuation date, the basis or basis of values adopted. In many instances, we have to use more than one basis of value in our valuation. The approach or approaches adopted, so income, cost or market, the method or valuation models applied, any significant data and inputs used, environmental, social, and governance inputs used and considered, significant or special assumptions and or limiting conditions, the findings of a specialist or service organization, the value and the rationale for the valuation, an IVS compliance statement, and the date of report. Next slide, please. So I know that we're going to be talking about environmental, social, and governance a little bit later, but I thought it helpful just to give a little bit about our chapter in relation to it. So we've expanded IVS to include environmental, social, and governance consideration and valuations across all assets and liabilities, but we do recognize that ESG is still very much in a developmental stage, and there are additional requirements that may be needed in future. And therefore, the valuer needs to be aware of relevant legislation and frameworks in relation to the ESG factors impacting a valuation. For example, we have the International Sustainability Standards Board, who have issued international sustainability standards. In the EU, we have the EU taxonomy, and each market is coming up with its own legislation in relation to ESG. And the other thing to note is that when we're looking at ESG, and within the standard, we do give an example of E, S, and G considerations. Not all markets will have the same factors as primary importance. For example, very much in Europe, in terms of buildings, we're looking at net zero carbon, but different markets will have different emphasis. And within the standard, we clearly say that the impact of significant ESG factors should be considered in determining the value of a company, asset, or liability. But I suppose the most important bit is the bottom bullet point, which is ESG factors and the ESG regulatory environment should be considered in valuations to the extent that they are measurable. Not everything is measurable at the moment. It's a mix of qualitative and quantitative factors and would be considered reasonable by a valuer applying professional judgment. So just looking at the an overview of the asset standards, you can see in blue the different asset standards that we have here. Now, in relation to business valuation and businesses and business interests, IVS 200 is probably the primary chapter that you look at, but most of them would also integrate intangible assets. So you would not only have to comply with IVS 200, but you would also have to comply with IVS 210. In fact, Nicolas and myself attended a very interesting webinar the other day where they were telling us that actually 80% of a company's value relates to the intangible assets. And not only that, if you look at the top companies around the world in terms of value, when you think that 80% of the intangible assets of brands such as Apple, which maybe largely rely on their brand name and other factors, is not recorded, this is a challenge for the industry, and we're in discussions with our counterparts at the International Accounting Standards Board and with other organizations about how we incorporate intangible assets more in the valuation process. And the other two main business valuation chapters to notice are IVS 220 and IVS 230. Some of you may also deal with REITs. And REITs is an odd one because to a certain extent, it can be done by business valuers. It's also, REITs are often valued by tangible assets valuers when we're dealing with real assets and the initial property offering. And it also relates to IVS 500 as well. And we made sure that we're consistent across the standards when we talk about different valuations. At this point, I'm going to hand over to Nicolas because I think he's best placed to talk you through the business valuation standards and the revisions. Thank you.
Thank you, Alex. We made a few changes, which were mainly clarifications around certain adjustments and streamlining some sections on intangible asset economic life. I just wanted to add on what Alex said about the importance of intangible assets. This is something that is key, not only for us in the valuation community, but also for the accounting community. As you know, IFRS 3 and 36 are open. There's currently a consultation around that, and you can see how that's a touch point between valuation and financial reporting, and that is why, to some extent, knowing that this was coming, knowing that ESG is still evolving, the changes we did to IVS 200 was somewhat minimalist this time. Alex, the next slide is, if we go to the next slide, it's tangible assets. Do you want to say a quick word on what was done for tangible and then financial?
Yes, as Nicolas knows, I'm not very good on quick words, but I'll try my best. But if we could move to the next slide, that would be great. So looking at the tangible asset standards, and you can see here, we've got plant, equipment and infrastructure. we have real property interests, and we have development property. And first of all, we revised the standards to make sure that they aligned with the general standards, were in the same order. We've also added further information. So in relation to data and inputs, we've included a hierarchy of comparables from direct to indirect market evidence. We've added additional requirements in relation to valuation models, ESG, and documentation. We've also now included infrastructure explicitly. It was always implicitly included in IVS 300. And we've also included an investigation section, so dealing with things such as inspection, that sufficient investigation and analysis should be used in evaluation. And it's probably at this point that I should also mention our perspective papers, and Nicolas might tell you a bit more about them later, but we have a series of perspective papers which are, though not part of the standard as such, they're one of the ways that we engage with the market on key issues. And they're also often a precursor to standard setting. And we have a very good series of perspective papers, both on ESG and goodwill, with further perspective papers coming out. But the reason I've mentioned this is almost selfishly, is we now have a perspective paper out on inspection that has come into the market that you can access through the IVSC website. And we're trying to engage the market, because one of the things we've noticed is inspection is a term that is commonly used, but has different meanings to different parties. So I just want to talk very briefly about the financial instrument standards and revisions, and they're quite extensive. So I recommend that you have a look at this chapter, those of you who are familiar with IVS, and those of you who aren't, it will be very informative in relation to the valuation of financial instruments. And we address the needs across all types of financial instruments valuations. And as you can see, there's a number of them. So it deals with developed and developing markets, all sizes of firms throughout the world, level 1, level 2, and level 3 securities, single financial instruments all the way through to portfolios, one-time and ongoing valuations. In fact, in many financial instruments, particularly in these uncertain times, it seems that they've been moving to valuations on a daily basis. It also shows the additional requirements for data and inputs, valuation models, and quality control. And it's extremely important that as part of this process, there is a sufficient degree of review and challenge, both in relation to the actual methodology or the valuation, but also in relation to the value as well. So as I said, standard setting, it's a continual process. It's never static. So at the moment, next slide, please, we're looking at our agenda consultation, which should be coming out in July this year. And some of the topics, and to show you, we're actually in discussing, so there are some other topics that we will be including in here, but our major topics are environmental, social, and governance, or sustainability as it's known as in America, because in the States, it seems ESG has become a politically charged term, and so they refer to sustainability. Technology and valuation, and this is not only artificial intelligence, machine learning, deep learning, but it's also looking at the use of other technologies such as drones for inspections. And what we intend to do is engage the market and see if these are the right key topics. And another key topic is valuation risk. You'll notice that within IVS, we have an overarching definition for valuation risk, and you could say that the standard itself deals with valuation process risk, but we're discussing other types of risk: valuation precision risk, valuation governance risk, valuation resilience risk. And we have a working group that is looking at that, and we will be producing a perspective paper probably over the course of the next year that may lead to further changes to the standard. Now, other topics we're looking at are digital assets, which also incorporate cryptocurrency, investigations and evidence. Private v public markets, you may also know this as listed v unlisted. We've noticed that this is a big issue. in valuation during the times of COVID crisis, the difference between the value of the assets within, for example, a REIT and the value of the actual REIT could be as much as 70%. Now, this shouldn't happen, so we are a group that is looking at that. Some of it, there are some things that we can do better as tangible assets. Maybe valuers should maybe look more at sentiment when there are no transactions happening. But at the same time, we're not comparing like with like. There's liquidity differences and there's other differences in relation to the valuation. And this is one of the things that the prospective paper will be looking to explore. We're also looking at prudential value for immovable assets because Basel 3.1 is being implemented within Europe in January 2025 and within the UK in July 2025, and it will probably come to other members of the Basel Committee in due course, as they all seem to follow through and following the requirements. Basis of value, we're going to relook at basis of value. We have our basis of value, and you can use any basis of value providing it's defined and it's from a legitimate source. But what we're going to try and do is look at it from a business valuation perspective, because there are maybe some additional basis of value that it would be helpful to have within an IVS. When we're talking about calibration, we're talking about model calibrations, and we're going to be looking at that as well within the standard. And we're engaging the market to see, do you believe that this is a key topic that we should consider in the next 0 to 2 years and incorporate in the next edition of the standard? Or is this a future topic that we should take longer to investigate? And another possible topic here is capital structure considerations. It's already mentioned to an extent within IVS, but we think we could provide more detail to make the standard more user-friendly.